Welcome to Global Investment Voice, where we explore investment migration issues and opportunities from around the world. With a special focus on the U.S. EB5 Immigrant Investor Program, we'll also cover citizenship and residency by investment programs from around the globe. If you're an investor, fund manager, developer, or enterprising entrepreneur and want to get the most out of these global investment migration programs, you have come to the right place. I'm Mark Deal, and I'll be your co-host on this journey. I'm joined by your host attorneys Mona Shah and Rebecca Singh, as well as other investment migration leaders from around the world. So let's get into Global Investment Voice.
Well, hello, everyone. Welcome to another episode where today we are going to discuss a really critical topic that resonates throughout the EB5 industry, and that is capital redeployment, or rather, how investors' money is used by the project. We've discussed this topic on our program several times over the years. What's changed is that there is a huge lawsuit out there which has pitted regional center against investor groups. And I think that is something, Rebecca, which is quite significant.
Oh, yes. The lawsuit was brought by IAUSA, which is the trade association for regional centers. But I just want to take a step back, Mona, for our global listeners, just to remind everyone that the EB5 program is where you can get your money back and you can make some profit.
Yeah.
But the investor's money is also at risk. So it's just important to note that there is no guarantee of repayment. And that's why I think this topic today is important for investors out there and developers alike.
Right. And then the reason it's really so important is just the amount. To give you an idea, before the EB5 Reform and Integrity Act of 2022 came in, there was an estimated $15 billion invested in various projects. That money was redeployed in multiple projects thereafter. Since 2022, and these figures amazed us, since 2022, there has been an additional $6.125 billion scheduled for deployment. And that's only between 2022 and 2024.
That's a lot of money.
Yeah. And you know how we came up with those figures?
No?
USCIS themselves, they stated how many cases that they had actually taken in those 2 years.
I think it was over 6,000 petitions.
Yeah.
We compare this to other global programs, and that's a lot of petitions.
Yeah.
Yeah.
For new listeners, we really need to simplify this topic, Rebecca, because it can get very complicated.
Yes. So I think the first thing is, what is redeployment? Redeployment is money that it's EB5 capital that you invest into a project that is then reinvested. So it could either be in the same project or it could be in other projects after the job creation has been fulfilled with the original project in order for the investor to meet the sustainment period. Now, I know that sounds very technical.
Well, what's sustainment, Rebecca?
Yeah. So sustainment is when your money has to be sustained in that project that you have to meet for EB5 requirements. So this was a huge issue before the new regulations took place in 2022, as you had to wait till your I-829 petition was approved. So it was dependent on your conditional residency, which of course took longer than 2 years.
Well, that wasn't the original idea, because initially EB5 wasn't meant to take years and years and years. We were supposed to be done in maybe maximum 4 years. So it seemed a very reasonable prospect. It's just that over the years, with the delays, it took longer and longer. And the money ended up staying with the developers for a longer and longer period. And then if you can recall, I think it was 2017, USCIS allowed the regulations to change from the I-829 being approved to just filing the I-829. But that still was a long time that developers had a hold of this cheap capital. And yes, they took advantage of it.
Mona, could you give us an example of redeployment, perhaps an example you've seen in your practice?
Let's take an example of an assisted living home, which utilizes EB5 money. The project takes 14 to 18 months to construct and maybe another 6 months to be operational. They're operational at 24 to 26 months. And at this time, none of the EB5 investors have got their green cards. They haven't even been adjudicated. And suddenly, there's an offer which comes in and it offers the developer a lot of money for this project. At this point, it would make total business sense to sell the project. But at the same time, they can't repay the investors because the investors are still in their adjudication period. So they take the money and then they utilize that money in a project number 2. And that's what we call redeployment.
The issue there is, though, and I think we're going to discuss more in detail later, Mona, it's supposed to be something that was supposed to be a healthy practice, right? It was supposed to be able to stimulate the U.S. economy. And instead, we've seen a lot of issues that's come up with this.
Yeah, there's a lot of redeployment which has gone wrong. And I think that's why we've seen industry groups like AIIA, which is a group which was just put out for the investors, who've advocated against these long periods of time that the money is kept. They're like, look, the project's built, give the investor their money back. And they did advocate this at the time that the new legislation was put in. But what kind of examples of redeployment gone wrong are there out there, Rebecca?
Oh, gosh. Well, the main issue, and like you said, is because of the backlogs. So the issue that we have seen is we say 3, 4, 5 years.
Rebecca, you mean backlogs just for certain countries, though, not for everyone?
Yes, that's right. So for those such as Chinese investors, Indian investors, the countries where there are backlogs,
right,
you're seeing way longer than 5 years. We have seen Chinese investors are backlogged 10 years.
Yeah.
So you're not only waiting the 10 years because you haven't received your conditional residency as yet, you're waiting 10 years to receive that. And at the same time, you invested prior to that. And then you have to wait the other 2 years when you do get your conditional green card. You're looking at about 12 years before getting any repayment.
Yeah, which seems very unfair. I mean, it is certainly more palatable for the investor that, okay, they know the project went ahead, the project created their jobs, and they're going to get their green cards when the visa is available. And at least if they get their money back, they can wait. It's palatable. But what is not is if you're waiting all these years and your money stays at risk. And we have seen projects where, unfortunately, COVID came along and they lost all their money, or they went into a redeployment, which the investors had no say about. And again, the money was just not there because there was a project problem or whatever. And we've seen so many problems that can occur. So it's not just the unfairness of not having your money for so many years and allowing developers to have their money, but also for the fact that things can happen. It was just too long.
I think also, Mona, it's too long. And then over time, you're redeploying these funds, and a lot of times the investors don't even have an idea where it's going.
Yeah.
The whole idea is to make sure you keep your investors informed. So you have the issue of not being informed. Where is your funds going? And then you have the opposite issue where then investors are informed, but they all want a different project or they want different investments to go into.
So we've experienced that too.
Yes. Yeah. So you can have where you've all invested into one project and then thereafter you're going into multiple. That's also a burden on the regional center, on the project developers to make sure that these funds are being sustained and tracking each and every individual's investment capital.
I wouldn't give too much sympathy for the project developers at this stage. When they have access to all this money for all these years, which is basically money that they can do whatever they want with, I do get the investor AIIA position. And to be fair, most of the industry, as far as the lawyers are concerned, are with the investors. We ourselves wrote many times in blog posts, there is no explicit reference in any EB5 statute or regulations that mandates capital to remain at risk after the jobs have been created. It was just put in there, and especially not to the 829 stage. I think that we can infer that Congress did not intend to impose an additional layer of risk after the job creation was verified. But that's not what happened.
No. So I agree with you on that. What I think happened is that they didn't expect the EB5 program to be so popular.
Yeah.
Right. And that's where we ended up with this redeployment issue, is because they expected these petitions to get adjudicated quickly, 2-year sustainment period during your conditional residency period, and you would have been repaid. I think the expected timeline was between 3 to 5 years.
Right.
Realistically. And then unfortunately, because of these long backlogs,
for some countries.
Yes, for some countries, that you ended up with a longer time period of repayment.
Right. And unfortunately, that repayment issue often hurt people from non-backlog countries, because we've seen projects where the vast majority are, for example, from China, and maybe one or two are from non-backlog countries. And then their money ended up getting dragged into the redeployment with everybody else's. So it really kind of hurt everybody one way or the other. So that's a bit of the backlog as to what redeployment is. Now, this lawsuit, which is tearing our industry apart, let's talk about that.
So I think before we even get into the lawsuit, we should take a step back. The new law
Another
in 2022. Well, we're educating. I hope our listener out there are understanding, what is really going on. So the new law, as we keep going on about, came out in 2022. And this really specified that the investors needed to sustain the investment amount for a minimum of only 2 years. This surprised the industry.
Yeah, this shocked. It didn't surprise. It shocked the industry. Yeah. I mean, because look, we're going in the other direction. And again, I get it. I understand why this was just not something that developers wanted to hear or regional centers wanted to hear.
Well, it was so much confusion, and that it was further clarified now in an October 2023 meeting where USCIS did confirm that the 2-year period for post-RIA investors, so those who filed after March of 2022, that the 2-year period began when you contributed the capital into the new commercial enterprise, the NCE, and then the funds were deployed to the job creating entity. So they did specify that.
That was at a meeting with the Ombudsman. And I can say, even prior to that point, that IAUSA had gone out lobbying. They tried very hard not to start a lawsuit. They did try to find a way to have this changed without doing a lawsuit, or at least clarified.
Yes. But of course, that didn't happen.
No,
it didn't go the way that some, I would say, in the industry expected it to. Because again, not everyone agrees with the lawsuit moving forward.
Right. So here's IIUSA's situation. They don't want it to be 2 years. And of course, the investor industry are thrilled that they only have to put their money at risk for 2 years. And then after 2 years, they can get their money back. But as we have seen, practical realities, does it work to keep your money there for 2 years?
From a developer standpoint, no. The thing is, most of these projects, Mona, we've done projects for years. And then recently, after the change in regulations, the last 2 years, we've done dozens, right?
Yes.
We have seen that these projects are what we call shovel ready in the EB5 industry, but it means that they're just breaking ground. They are anywhere near paying back. And so that means it's going to take at least 2.5 years to get this project up and operational.
Well, just to clarify, the law states to be returned 2 years once the jobs have been created. But what you're saying is that if, for example, we've got a construction project and the hotel, say it's a hotel, and the hotel is built, and it takes 2 years to build the hotel, the jobs are now created, and the investor now says, I want my money back because it's only been 2 years. What you're saying is that, wait, that hotel is just built. It's not anywhere near operational.
Exactly. So jobs were created, but it does take another 2 to 3 years for any project to become stabilized.
That's right. That's right.
That's where the issue's coming in, because how can a project sustain itself and also then have to repay back investors right away?
Yeah, that part doesn't work unless you have a project which is already halfway through and all EB5 is doing is taking out the developer's money, which is not what Congress envisioned. It is certainly not what they envisioned when EB5 money is coming into TEA and rural areas to help maybe start new projects or give a boost to a certain area. That's what they envisioned.
Yeah, that's the problem. Investors, of course, any investor out there would say that I want to go into a project that is halfway built. You know that something's happening, you see it moving on. And then, of course, there are a lot of projects that are in TEA areas that may not be TEAs that we expected it to be, right? We see it a lot in New York City. But as you said, Congress' intent was for those areas where there was less job creation, rural areas that really need it. And unfortunately, they're not going to have the funding to start those projects right away. And that was the whole point of EB5.
Yeah, you know what it does bring to mind, though, obviously because we deal with so much at the moment, but there is an interesting comparison between EB5 and investments in citizenship by investment programs. Because in an EB5 investment, while return of capital isn't guaranteed, it is at risk, and there is the potential for a small profit. Regional centers work to ensure that projects are successful. They have to produce job creation. That's not something that we have to have in CBI programs. In a CBI program, there really isn't the payback setup that you have in EB5 programs.
So it takes out the redeployment issues.
Yeah, exactly.
Yeah, that's right.
Well, the other thing is, though, with the CBI program, they typically depend on the investor having to sell the property they acquired, right? Because the property is technically their ownership. Whereas in EB5, you invest in a fund or you're investing in a new commercial enterprise. So the developers take that capital, invest it into the entity that is going to create the jobs.
Right.
And then it's going to be their responsibility to return the capital. So you're technically going into a loan or a preferred equity model with EB5 versus with CBI, you actually own that property. So if you're going in and you're 5 years and now you're ready to sell, you have your citizenship and your passport. If you're going into an unfavorable market or you don't have the expertise in selling or you don't have a good management group to help sell the property, you can see some limitations coming in that respect.
Rebecca, is that perspective, is that for the regional center or is it for the developer or is it for the actual investor themselves?
So the difference is, Mark, is the regional center with the EB5 program, like we said, you have that fund where you're investing and you're investing, but your funds are being used as a loan to that project. So there is an agreement, right? So this is where contract law comes in. There's an agreement between the projects to come in and they have to return the capital. Whereas in CBI and a lot of these other programs out there, you're investing in a property, but you're obtaining some ownership of that property. And then at times it could be your responsibility to have to come back and sell that property versus the developer.
Right. I guess what I was thinking of is it sounds like it's kind of a cash out concern, at least for EB5 in that first example. And if it's at the project regional center portion of it, as far as like coming up with the funds, can they refinance to pay back the investors or is this more of a redistribution issue?
So with regional center and EB5, yes, if you've created the project, you're operational, you're ready to sell, you're ready to refinance, you can. The issue is then with the investors and under the regulations, in the old regulations, you had to sustain their funds that has to be at risk at all times until they were able to file the I-829 petition.
Right.
And now the rules have changed and whereas now you only have to sustain those funds for only 2 years.
Yeah.
So then we've come into issues where if it's only 2 years, can the project plausibly repay you back? Are they operational? Or even some have argued that is your petition even adjudicated at that time? Yeah. So, there's issues with
829 backlog.
Yeah. But anyway, we digress. We're good at doing that. We're good at digressing.
So much to discuss. That's why.
To get back to the lawsuit, Rebecca.
Yes.
Did I ask you why we went ahead with the lawsuit? I know it's pretty obvious we've discussed, but was there any other reason or what reasons did IIUSA give for the lawsuit?
So this is where we become lawyers and it becomes technical. So IIUSA, really, they argued that RIA, the law in 2022, never actually changed the sustainment period, right? It was always meant to be 2 years and it was linked to your conditional residency period. And that remains the controlling regulation. And so their argument as well is that in order to change any agency operation rule, such as the sustainment period, USCI should have actually gone through the rulemaking process under the Administrative Procedure Act.
And it's always good to add a technical issue because if all else fails, usually a judge will say, well,
technicality, right?
Technicalities, exactly. Yeah.
So basically what they're saying is that the agency failed to follow procedures and it didn't allow the public the opportunity to give any notice or any comments to this new change. And of course, this new policy upended the industry. And there was just, as we've seen, a lot of back and forth and issues going on with that.
Yeah. But then outside of that, I think the other reasons that IIUSA have given for their lawsuit are pretty plausible, that it just doesn't work in the industry. And for the reasons that we've just discussed, really.
Yeah. And look, I think what IUSA was trying to say, they don't want to go back to the old days. They don't want investors sitting there 10 years and not getting repaid. I think they just, like you said, they wanted something more reasonable. And I think they were coming up with a 5-year period, sustainment period versus a 2 years.
Yeah.
Which makes sense.
Well, I mean, that's what they asked for. They asked for a 5-year period. But here's the situation, Mark. The judge has given IUSA 30 days to come up with a settlement, not just IUSA and the government, 30 days to come up with a settlement. If they don't, could we go back to the old days? And that's what the issue has been on all these blogs. And I can tell you, it's been spicy. There's open criticisms on both ends because all the advocates for investors are feeling angry and bitter that IUSA have even made it this far, that there is even a possibility of going back to the old days, and more so because they believe that the 6,000 plus petitions which have just been filed have all been filed on the basis that they can get their money back within 2 to 3 years. Which isn't quite true because we know of a lot of petitions. In fact, Rebecca, I don't think there's a single petition we have filed. We filed many over the last 3 years where they can give their money back in 2 years.
Yeah. Well, the issue is that, again, it depends on where you are. You can file with permits and licenses in place, but things happen. There are delays in project development. You know, we've seen several projects that had issues where they had to get easements and permission to build. We've seen where water damage has destroyed certain buildings and it took an extra 6 months to get that underway.
They can have snow in Atlanta and everything can grind to a halt.
Exactly. So construction, as much as you can have a solid timeline, you just never know. And you have to expect delays. And I think it would be unrealistic unless the project is halfway built or maybe nearly there. Other than that, I think it would be unrealistic to get that repayment back in 2 years.
Yeah, Mona, I can see why you're using the term spicy because the lawsuit and the potential settlement have created this intense debate and criticism within the EB5 industry. And I can understand the fear of the possibility of reverting to the old regulations can anger the investors, the advocates, and everybody else for these longer sustainment periods.
Well, yeah. So here's the issue. I know this is the gossip part, but here's the issue.
Don't tell anybody.
IUSA is a trade industry for everybody, supposedly. And yet, when it comes to any of these type of lawsuits, there are only a handful of people who really do step up. And it's also spending money. And of course, listen, the regional centers are going to benefit. The lawyers and service providers see the other side and they don't benefit from anything. So they are going to take the other stance. And of course, any body which is investor related, that's always going to oppose any kind of lawsuit like this or any kind of action like this. So you can see where the anger is, where it's being pulled. To be very fair, we've given our feelings that 2 years is too short. Realistically, it should be 4 to 5 years, but we certainly do not want to see the old days. The old days did produce horror stories. And at that time, it was only 500,000. I shouldn't say only 500,000. Do you have 500,000 in your bank account? I don't. But, you know, it was 500,000, which was still difficult to lose. But 800 plus, by the time you add all the fees and things, now you're talking close to 1 million. That's much harder to lose or much harder just to sit there and be reutilized by the developers. But of course, there are not so many, I won't like to say bad actors out there, as opposed to developers who are self-serving or they don't care about the investors.
Yeah, well, it's money opportunities.
Of course.
Their business, right? So they're just going to say that, well, here's an opportunity to invest again.
Yeah.
This is where that whole, you know, we had debates too where USAS kind of questioning, what do you put your money into? And people were like, oh, well, we should put in a CD where it's kind of safer. You build some interest over time. At least their money's sitting there. But no, USAS came back and said it had to be redeployed into another project that was at risk. Yeah, it had to have more at-risk issues.
And it didn't make any sense. It doesn't make any sense because the job creation is done. Interestingly, it's not done anywhere else.
Well, you know, Mona, this is such a difficult topic, and I am feeling for all our listeners out there, it's a hard one. We're not advocating for anyone. We have our own opinions as well. We hope that something comes of this lawsuit that is going to be beneficial for both the investors and for the developers and doesn't maybe advocate for one over the other.
Rebecca, if the technicality side of this wins, we could be looking at years before there is a settlement.
Yes.
As we know, the judge is leaning towards IIUSA. And again, it makes sense. 2 years doesn't make sense. But 5 years makes sense. 4 years, 5 years makes sense. If they can come up with an agreement, that's the way to go, right?
Yes, Mona. And let's hope that it fosters open communication among all EB5 stakeholders. Just because USCIS really doesn't understand the complexities of business and how things are run and how businesses are actually operated.
Don't get me started on that topic.
I knew you were going.
That's a big thorn on my side. Yeah, Mark, we are going to discuss that in great detail later, but we do hope this is an evolving situation, and we do hope to keep our listeners up to date with all that's going on.
Yeah, thank you, Mona, Rebecca. I mean, obviously this news is interesting as it develops, and it's nerve-wracking. Rebecca, you mentioned it yourself. This is tough, for people listening with all the changes and the potential future implications to the EB5 program.
Well, we'll keep monitoring this evolving situation, Mark, and provide updates and insights as they develop.
Thank you for being with us today on Global Investment Voice. Do you want to get the most out of global migration and citizenship opportunities? Then head on over to our website at globalinvestmentvoice.com. From there, you can easily search and stream from hundreds of podcast episodes, as well as stay current with the latest migration news and investment opportunities by joining our insider newsletter. The topics presented in this podcast are informational in nature only and are not to be taken as specific legal, financial, or investment advice. Mona, Rebecca, and their legal staff can be reached at mshawlaw.com or by calling their New York office at 212-233-7473.